In this week's episode of the Stockscores Market Minutes, we're going to talk about why you need to trade with the trend. I'll do my regular weekly market analysis. We'll do a market scan in search of opportunity and look at the day trade of the week on AGRX. Okay, so trade with the trend. It's something we hear often in trading. It's a bit of a cliche, but what does it really mean? Well, I'd like to compare this idea with paddling a canoe on a river. You know, we can paddle with the current or we can paddle against it. And obviously, it's much easier to paddle with the current. And the same can be said for trading. You can trade with the trend of the overall market. If the market is in an upward trend, then you want to be a buyer. Or you can fight the trend and be a short seller of stocks when the market is trending higher. It's a lot easier to trade with the trend and then wait for the trend to change before you take that contrarian view. Understanding the price trend that is relative to your trades is really important. You know, a day trader must consider a shorter term trend. I like to look at the 2-minute or the 13-minute trend of the S&P 500 when I am thinking about whether I want to be buying stocks as day trades or shorting stocks as day trades. Now, when I'm looking for those longer term trading opportunities, I'm looking at the weekly trend on a 3-year time frame for the S&P 500. Now, each week in this video, I try to tell you what that trend is, and that's what we'll get into in just a moment. But if we look at the chart of the S&P 500 on a short-term basis, you can see here this is the 10-day, 13-minute chart. Well, for most of this week, we were trending higher, and therefore it was better to be on the long side. The previous week, we were trending lower when we had that little bit of a correction going, and so it was better to be short selling stocks at the tops and maybe buying at the bottom of the channel, but generally speaking, you wanted to favor the short side as the market was trending lower. And again, this week, we've been in that upward sloping channel, and so generally, you want to be buying stocks because the market trend was up. Right at the end of the week on Friday, we broke the upward trend line, and now we've switched to falling tops. And so again, on Friday, short selling was the better course of action to take. Now we can apply that same thinking to a much longer term chart. Here is the S&P 500 on a weekly time frame, and we've been in an upward trend for some time. But of course, if we get a little steeper and more short-term biased, we can see that we were in an upward trend up until 2 weeks ago, and I had a little bit of a concern that we may get more of a pullback. Well, this week we've bounced back and overcome that, so we're back into that upward trend. Okay, let's get into our normal market analysis, starting us off with the U.S. markets, and you probably have a sense of where we're going here. The market rebounded quite nicely this week. You know, last week we were talking about the potential for a stock market crash, and my comment was until the long-term upward trend line is broken on the weekly time frame, we shouldn't get too concerned about that. Well, we did bounce back nicely starting on Monday, although we really didn't break the downward trend until Tuesday, and then on Tuesday with that gap up that basically overcame the weakness, and we rallied back to get back to the highs, which was where we are stuck now. Pretty typical when a market rallies into resistance, it gets stuck at resistance, and we saw that on Friday. So this chart is neutral right now because we've rallied into that resistance zone. Looking at the longer term chart, you can see that that upward trend that I showed earlier is still intact, and therefore you want to remain a bull in the longer term time frame until we get a break of that weekly upward trend line. There's really no reason to doubt the buyers, as they are the force that has the most strength in the market right now. Looking at the Russell 2000, a little choppier here. This is our small cap sector. We had a pretty decent upward move for a few months, and it was kind of fun again to trade those small cap stocks. But in the last 3 weeks, we pulled back. This week, we bounced back a little bit. We'll see if we can get through this resistance, but if we do, then we've got this longer term resistance to deal with. So it feels like there's a little bit of life coming back to the small cap, but they don't look as healthy as the larger cap stocks. I think we could see another week or two of upside before we hit that horizontal line of resistance that I've drawn right here. On to the Canadian markets, and the TSX, very similar to the S&P 500. It broke its pullback here. We started into that upward trend, and then on Friday we broke that. So we could see a little bit of a pullback early next week, but generally speaking, the buyers are still in control, and you can see that when we look at this longer term chart. There is the longer term upward trend line, that upward sloping channel. We're close to the top of that channel, so again, would make some sense that we get a little bit of a pullback near term. But looking out weeks or months until that upward trend line is broken, I remain bullish on the Canadian market. TSX Venture, which of course is our microcap stocks in Canada, trying to get through this resistance. Can't seem to do it, but at least it's building a rising bottom. So if we could advance up through that line of resistance, that would be a positive. However, generally speaking, I think you should still remain pretty cautious with the TSX Venture stocks. On to currencies, and of course the US dollar has been in a bit of a pullback mode. It had a pretty good week to the upside this past week, and it's now at the top of this downward sloping channel. We'll see if we can break through that. It would be interesting that happened, because then it would overcome what was really a bearish breakdown when the upward trend line was broken there. So it's a critical week next week for the US dollar. I think we're probably going to pull back in the US dollar next week, but let's see if we can make that break of the downward trend line. The strength in the US dollar means weakness in the Canadian dollar, and a lot of that has to do with the weakness in oil, because there is a strong correlation between the Canadian dollar and oil prices, and oil prices have been fairly lousy lately. We are at a point of support where the Canadian dollar should bounce, and if it does bounce, it'll probably work its way back up to that upper part of the range. But essentially we're in this sideways boring trading range, and until we can break out of that, I think the Canadian dollar is just destined for that sideways trading action. Interest rates. The interest rate chart, of course, is the bond chart, which is inverse to interest rates, and the bond market has been moving up the past 3 weeks. Last week it took a bit of a stall as it comes into resistance. Reasonable to expect that. Generally speaking, interest rates look stable, perhaps in the near term destined to go sideways, but if we can break through this resistance level on the bond market, that means interest rates are going lower. Until it happens, I wouldn't get too excited about it. For now, I would be neutral on interest rates. And finally, those commodity charts. We have gold and oil starting us off first with gold, and it is a bit of a sideways week as some of the fears about a market correction have dissipated. Gold doesn't have as much luster, if you'll pardon the metaphor there. Ultimately, this is still in a long-term upward trend, but a little choppy the last 4 or 5 weeks, so I think it's a difficult place to trade. Next up is the oil chart, and you can see here that oil has suffered a pretty good pullback the last 5 weeks. It is now at support where it really should bounce. You could argue it's kind of gone through that if we look at the bodies of the candles, but I'm going to give it the benefit of the doubt. I'm expecting that oil will make a bounce here. It's certainly overdue for one, but until it does, I would be very cautious with oil stocks as they just don't look like they're getting the backing of the commodity. And finally, the fear chart. Here is the chart of the VIX, and you can see fear is pulled back. Not quite done with yet. I think there's still some elevated sense of concern about whether there could be weakness in the market, but it is certainly less than where it was last week at this time. Fear coming down, but it's not really low just yet. So my ratings then, long-term bullish on both the Canadian and US markets, but neutral short-term as we have rallied into resistance. Also similar ratings there on gold, bullish long-term, neutral short-term. And oil, neutral long-term and bearish short-term. It does need to bounce back off of that support zone. Markets have done a good bounce back from the coronavirus scare and held the long-term upward trend line, taking away the potential for a stock market crash. With stocks at resistance, having rallied into that zone, we are likely to see some more volatility near term. Wouldn't surprise me at all if we get a little bit of weakness next week, but that would be short-term based. I'm not too concerned about it just yet. Gold is quieting down, and oil is at a price where it should bounce. As I said, fear is falling. All right, so let's do a Stockscores market scan now. The market scan tool is a tool on Stockscores where you can search for opportunities using a wide variety of filters. And I like to run different scans. We have preset scans, but of course you can also build your own scans in the market scan tool. It's just a great time saver, and it drives toward those abnormal stocks that we know tend to be early in their upward trend. So one of the things I like to do on a daily and weekly basis is look for stocks that are making an abnormal price move to the upside, and then I check the chart patterns to see if they have the kind of pattern that I like to see and that I teach others to look for in the different educational products that we have at Stockscores. And you can go to the Stockscores website to learn more about that. So let's jump into the market scan now. Just jump over here, and we're going to run this week the abnormal breaks market scan, which looks for, again, those stocks making an abnormal price move. And ultimately, we have to look at the charts. You can see it's a pretty fast little tool. It went through every stock listed in the US, and it found 27 that made an abnormal price gain on Friday. Then my job is to take a look at the charts. Now, what I typically do is look first at the daily chart. If I think it has some potential, then I look at the weekly. And you can see here ASRT was strong on Friday with very strong volume. The problem with it is that it ended up closing well below its open, and so that's a bit of a negative, and it, maybe struggling with that resistance at $1.50. So I don't think that's quite good enough. And as I cycle through these, if I see something that has some potential, then I take a look at the 3-year weekly chart. So here's an example of that. The stock breaking from an ascending triangle. Now I want to look at that 3-year weekly chart, and I see a pretty decent turnaround situation where we've got resistance. I didn't draw that great. Let me just blow this up a little bit here. So by clicking on the chart, you can make it bigger. And so we're going to draw this horizontal line of resistance, which it's trying to get through. See how the volume's picking up in the last little while? So those are all signs that the stock is under accumulation and it has some good potential. Now I'm a little bit worried about resistance here. And so if I was to give this a rating out of 10, I'd give it a 6.5 out of 10, which means I think it has a 65% chance of moving higher. So that's the process. And as I try to do here each week, do a little bit of a market scan just to show you how that tool works, and hopefully share with you some different opportunities that I think are worth checking out further. This CBIO is not bad. We'll give it a rating in a moment. But just to go through the analysis, it is breaking higher from a rising bottom. It lacks really strong volume, and then it's got a lot of resistance here. So I like that there's some buying interest. We've seen, some decent up weeks in the past 2 months, but I'd give this a 6 out of 10. It's good, but it's not great. All right, so that's the process. And again, if you are a member of Stockscores and you know what to look for, then you can run these scans each week. If you want more information on that, go into the Trader Training, Products and Services, or the Learn How to Trade section, and you can learn more about that tool. All right, let's get back to the presentation and talk about the day trade of the week. Of course, what I do most of the time is day trade. I can teach you my method. We use something called an action candle, which is a abnormal price and volume move on a 2-minute candle. We scan the entire market for those, and when they are found, people that subscribe to my Active Live service see that in real time. And this is one of the stocks that we picked up on Friday. It made its action candle there at around 11:30 Eastern Time. It was the signal that met the requirements of my day trader strategy algorithm. For every $100 of risk, the position required was 2,490 shares. That meant almost $9,400 in capital for that position. However, you can margin that 3 to 1 because it is a day trade, which means you only have to put up 1/3 of the capital to take this trade. At the end of the day, it was up 4 times its risk. That's what that means when you see there 4RR. So it was up 4 times its risk, which is a $400 profit on $3,130 of capital required, representing a 12.8% return for a 1-day hold. Not outstanding. We see some that have been a lot better, but certainly better than a kick in the head, and just an example of one of the stocks out of many that were triggered on Friday. All right, well, that has been the Stockscores Market Minutes for February 10th, 2020. Hope that you've enjoyed it. Please leave a comment. Most importantly, subscribe to the channel. Let me know that you like the content by clicking on the like button. And as always, trade well.